Good morning, everyone, and welcome to ERA's monthly directions seminar. Before we dive in, here's a quick shout out to join our growing ERA VIP community. As an ERA VIP, you'll enjoy priority invites to exclusive ERA seminars just like this one today, early access to the latest property insights and tools, special perks curated for our ERA VIP community, and every month, 10 lucky VIPs stand to win $1,000 in travel dollars. Sign up now at vip.era.com.sg. Now, the property market's not slowing down, it's actually picking up speed. So with rates stabilizing and demand rising across key segments, momentum is building fast. So what are the key trends we should expect to see in 2026, and how can we use them to inform our property decisions? In this timely session today, we'll break down what's driving the market forward and how you can ride into 2026 with confidence. Before we begin, please note, while every effort has been made to ensure the accuracy of the information shared today, ERA accepts no responsibility for any loss or inconvenience caused by errors or omissions. The insights, opinions, and examples presented are for information and educational purposes only. As the property market is dynamic, we strongly encourage you to consult a trusted ERA advisor before making any property-related decisions. Let me now introduce our speaker, Mr. Marcus Chu, CEO of ERA Singapore, ERA Asia Pacific, and APAC Realty. With nearly 30 years of experience in real estate, Marcus has played a key role in shaping ERA's growth across the region. A visionary leader and seasoned investor, he brings unparalleled insights into the evolving property landscape. Please join me in welcoming Mr. Marcus Chu to kickstart today's seminar.
Hi guys, thank you for attending our series of monthly directions in the year 2025. This series is very special because I will be talking about galloping into the year 2026, which is a brand new year for Singapore's home market. And I tell you what, in 2026, home market will power ahead further. Let's look into my sharing today. I'll be talking about 3 points. First, review the trails that we rode in 2025. Number 2, how the year of the horse spurs Singapore's home market. And number 3, where are the new opportunities in a brand new year as we galloped in 2026? So in our content, we will be focusing primarily on cause and effects, which we think is crucial to understand why phenomena occurs, which is essential for our explanation, predictions on market impact. So in late 2024, I have made a predictions that 2025 will be a boom year for Singapore private home market. And indeed, in the year 2025, property market prices and transactions hit a new high. As you can see, home prices is all-time now high across all segments, from non-landed to landed to HDB resale flat. Prices have actually grown to all-time high. Well, if we were to reflect back to the time where COVID strikes the world, during COVID times when restrictions start to ease, and that is back in Q3 2021, home prices at that time accelerate at a very fast pace. As you can see here, the 4 years growth from third quarter 2021 to right now third quarter 2025, non-landed home prices have increased by almost 20%, whereas landed prices have increased almost 16%, and HDB resale flat have crossed 24% growth rates. As compared to 2 years during the COVID times before the easing of COVID-19 restriction, the growth rates is on a slightly slower pace. Now it has picked up at a faster pace. So will this momentum continue to ride on in the year 2026? Let's find out in today's monthly directions. So the question is, what is driving the Singapore home market? Well, I would like to share with you a few pointers. The first cause is global uncertainty. You know, when there's global uncertainty, there is market volatility. And due to all the external events that is happening around the world, from the never-ending trade war to wars between countries, this has actually caused a lot of market uncertainty and volatility. And when that happens, investments will be looking out for safe haven, which means we'll be looking out for places that is more predictable and more stable and at the same time more promising. So this will point to Singapore, which is seen as a safe haven, which is also seen as a safe haven's asset. So safe haven country, safe haven assets. And in fact, the global financial service company Morgan Stanley says Singapore market is a safe haven and raises price target for this sector. So I can confidently say that Singapore home market is indeed in that bright spot. Next, I would also want to explain about why the home market has been so strong. It's because of this pent-up demands, and I want you to prepare for the next surge. Why are there pent-up demands? So I would like you to reflect back in those days in 2019, pre-COVID times. For government land sales, the controller of housing actually takes shorter time for approval of launch. However, post-COVID, in the year 2022, things are a bit different. Because of what we have experienced during COVID, there are delays in constructions, such as the disruption in supply chain, labor changes, and there's also introduction of more stringent policies by all the government authorities such as BCA, URA, SLA, and IRAS. And all these increased regulatory and compliance burdens have caused a slowdown in terms of the new launches supply. So the uncertain market due to the fallout of COVID-19 have actually caused the government to introduce fewer government land sale sites during COVID time. And because of all this, COVID have actually caused a pipeline of backlots. And this actually equals to long waiting time for approval and longer queue for new launches. So that's why we've seen post-COVID in 2022 a slowdown in new launch supply. But right now in 2025, new launch supply have actually picked up to pre-COVID level, which is almost 11,000 units. So what I want you to bring your attention to is this. When there is more new launches, it means more new launch sales volume. So this is apparent in the year 2025 because of more new launches. There is more sold unit. As compared to last year 2024, the number of launch have actually increased from 6,647 to 10,992, which is equivalent to 1.65 times. And the number of units sold have increased from 6,469 to current almost 11,000 units sold. And that represents 1.7 times. And over again, over the last 6 years, whatever number of new home supply unit launch is very close to the number of units of new launch sold. So every single year, we see this phenomena. Unit launch, unit sold, unit launch, unit sold, even much more. Unit launch, unit sold, oversold. Unit launch, unit sold, almost the same. Unit launch, unit sold, about the same. So more unit launch equals to more sales volume. Phenomena is what we see and observe over the years in the market. So that explains 2025 is certainly a boom year because there's more unit launch. And to me, the definition of boom is when there's more than 10,000 unit launch in 1 year, it also means there is 5-figure unit sold for that year. So it's a boom year. However, during those years when the number of unit launch is hovering about 5,000, half of that 10,000, then I would say it's quite a trough time for the new launch market. So the market is fueled with wealth creation via new launches. And when there is more new launches, there is more new launch transactions and more wealth created. So new launch boom time to us will continue in 2026. So in the year 2026, the number of unit launch is slated to be more than 10,000. And in the year 2027, the government land sales that is sold and forecast unit to be launched is about 5,300. And GRS sites not launched, forecast unit to be released for first half 2026 GRS lease. Will it be about 5,000 or more than 5,000? We think so. And that will create another more than 10,000 units for the year ahead in 2027. So to us, 2026 forward will be another boom year in the year of the horse. So as evident, next year, we already see a pipeline of launches. And as you can see in 2026 new launch, the number of new launches will be more than a dozen already scheduled to launch. Another reasons why the Singapore home markets is so strong is because of the love for property, or in other words, preference for property. Everyone is hungry for property. Let's talk about HDB BTO flats. BTO flats are oversubscribed at popular estates by 6 times to 8 times. How about new condo launches? It is also oversubscribed by 3 times to 4 times, as evidenced by the interest collected over recent weekend launches. This is certainly true that the love of property has driven the Singapore home market strongly. So in ERA, we conducted our annual My Dream Home Survey, partnered together with Ngee Ann Poly. And My Dream Home Survey has found that more than 3 in 5 Singaporeans prefer to invest in property over stocks and bonds. The question that we ask is, I would rather invest in property than stocks. 64% say yes. Then cryptocurrency, 82% say yes to property. Commodities, 66% say more to property. Bonds, 67% says more to property. Banks and fixed deposits, 68% say more to property. So, this is according to the survey that we have done, more preference for property investment. In a nutshell, what is driving the home market? So these are the 3 things. Number 1, Singapore home markets is positioned as a safe haven assets. Number 2, pent-up demand. And number 3, strong preference for property among the locals in Singapore. How the year of the horse spurs Singapore's home market. This is what I want to share with you today is about horse. So our content focus on horse. H stands for home buyers shifting from HDB to private homes. O stands for ongoing rise in land costs, keeps home prices resilient. R stands for resurgence of OCR sites with a flurry of launches. S stands for stable market gallop ahead as interest rate ease. E stands for expect prices to trot higher. Waiting may cost more. So let's talk about H. Home buyers shifting from HDB to private homes. Do you know there are stricter resale rules for BTO flats, such as the Prime and the Plus flats? There are the 10 years MOP instead of the all-time 5 years MOP. There are also increasing subsidy recovery rates. I will show you in the next slides. And there is only Singaporean that is eligible with $16,000 monthly income ceiling. So Prime and Plus flat indeed has a lot of restriction. So talk about the increasing subsidy clawback. Over the years, the clawback has been increasing. Now Prime and Plus flat was introduced about 2 years ago in 2023. The subsidy clawback that was introduced back then is about 6 to 8%. So last year in 2024, that subsidy has actually crept up to 6 to 9%. And this year in 2025, do you know that prime and plus flat subsidy clawback in the future, if the owners wants to sell, is currently at 7 to 14%. So imagine 10 years later, definitely the resale price will be higher, isn't it? So right now, let's say the resale price of a very well-positioned prime flat is resale at $2 million. What will be the clawback if it's 14%? 1 decade later, it means $280,000 because the subsidy clawback is based on the future resale prices. Next, for the HDB market, there is also a new policies that was introduced. It is the VERS. And VERS, to replace SURS, for older HDB flat has some effects. And there is no more guarantee of older flats eligible for VERS. It requires majority of the owner's consent. So VERS has lower compensations than SURS. And VERS has lower success rates. And VERS is riskier. Retirees of the old flats may find it difficult to secure a loan for their next flat. So they rather stay in the old flats. So all these rulings and policies of HDB flats does have some effects over the longer term. So the cause is stringent resale policies for the prime and plus resale flat, plus lower compensation for VERS for older resale flat, thus has an effect, which is what the government always want, more affordable HDB flats. And long-term market impact is this, resistant to HDB resale price gains. And that explains why more people are switching to buy private condos. It is evidence that over the last 10 years, there's increasing demands for condos. 108,000 more upgraders to condos over last 10 years cannot be wrong. You can see 10 years ago in 2015, the numbers of non-landed homes stands at 274,000. And in the latest statistics presented in SingStats, it shows that the number of non-landed homes has increased to 382,000. So the cause is buyers target new private homes, and that effects means strong take-up and near sell-up launch weekends. And the market impact, new home transactions volume and prices increase. So new home sales hits highest since 2021. Right now, the statistics that is presented in January to October 2025, the number of new home sales has exceeded 10,000 units. On average, over the last 10 years, is 8,257 units. So this is like the 4 years high since the last peak at more than 12,000 units. So over the last 10 years, this is like almost all-time high. So why the strong take-up rate of new launches I've explained to you previously? We have actually seen recent take-up rate as strong as 83% over 14 project launch with 5,518 units sold. So such take-up rates is phenomenal, never seen before over the last decade. So higher price acceptance are also observed for all the condo launches recently. From CCR to RCR to OCR, we witness record transaction prices for new launches. In Upper House at Orchard Boulevard, units are sold at more than $3,008 per square foot. At Oreo, units are transacted at more than $3,006 per square foot. And at River Green, units are transacted at more than $3,005 per square foot. Zion Grand, units are transacted more than $3,900 for RCR new launches. And Promenade Peak, more than $3,005 in RCR. One Marina Garden, more than $3,003 in RCR. How about OCR? It is transacted at more than $2,008 per square foot for Alta. And for Park Town residents, it's transacted at more than $2,006 per square foot. And for Lentor Central residences, it's transacted at more than $2,005 per square foot. So in a nutshell, home buyers are shifting from HDB to private new homes. And this is observed by the recent strong take-up rates of new launch developments by upgraders with higher price acceptance for new launch in all regions. So I'd like to touch on the next letter O. O stands for ongoing rise in land costs keeps home prices resilient. Haven't you seen these headlines over and over again that government land sales are transacted at record prices? Yes, this year, 2025, Bukit Timah Road GLS has transacted at a record price of 1820 per square foot per plot ratio. With how many developers bidding for that site? 8. So it's oversubscribed by 8 times. This is phenomenal because if you look at the whole year of 2025, developer average bids for GLS sites oversubscribed by about 5 times, to be exact, 4.9 times. So these are all the government land sales that was sold in this year 2025. The records that is set currently, this is the Bukit Timah sites in CCR, transacted at 1820 per square foot per plot ratio. This record is after Holland Link, which is transacted at 1432 per square foot per plot ratio. So Bukit Timah site, new record after Holland Link CCR site. So from 1004 has jumped to 1008. So you see, actually the last high become a low, and that's because there's a new high. So what about this OCR site that is transacted in 2025? For OCR transacted at 1388 per square foot per plot ratio. Will this new high in OCR be a low in the near future? I guess so. New record GLS land price replayed over and over again. So right now we are talking about Bukit Timah site at record prices. How about in the past years? Over the last 2 years, we have seen over and over again, government land sale sites has been record, and some is even phenomenal. For example, the OCR sites in Bayshore Road and Chuan Grove have hit a record high never seen before of almost 1004 per square foot per plot ratio, which is quite close to CCR land prices. So all these new record government land sales by different region has proven one thing. Regardless of the regions, every sites present opportunity for developer to anchor and set benchmark prices. Well, to put it this way, because of the aggressive developer bid for government land sales, there is an effect of higher land costs set every year. Because if developer is not able to get a site that is oversubscribed by 8 times, for example, 7 disappointed developer will continue to bid higher price for other exciting land site. And what this means is they have to bid at higher land costs. So with that, it will also mean that the impact to the market is higher launch prices in 2026 moving forward to 2027. All right, so that sums up the ongoing rise in land costs will certainly keeps home prices rising and more resilient. Next, let me move to letter R. It stands for resurgence of OCR site with a flurry of launches. So look at this Singapore map. OCR represents outside the core regions, which is all these launches that is presented in this map. And this region, the central region, which consists of core central region and rest of the core region, is here. So we take a look at the numbers. These are the numbers. Launches over the 3 regions for the past 5 years. As you can see, 1, 2, 3, 4, 5, and coming to the new year of 2026. So for the full year of 2026, OCR will have more launches ahead. What will this mean? Let me explain. OCR has been the strongest price growth across all regions, at least over the past 5 years. The growth rate is almost 40%. Primarily, it starts from a lower base. And this also spurs growth in RCR at close to 30% and CCR just crossed 20%. So the cause of price growth strongly in OCR. So in 2026, we will see more OCR new home launches. And this will mean stronger price growth in OCR will create more excitement and hype in the market. There will be OCR setting benchmark prices, driving prices for other regions to catch up. And in totality, prices across all regions will continue to climb. So let me touch on the next letter S, which stands for stable markets gallops ahead as interest rates ease, spurring transactions. Interest rate has returned to post-COVID level. If we take a look at the compound SORA 3 months, currently in 1st November 2025 is at 1.31%. And this is actually at about post-COVID level. And the other thing about Singapore 6 months T-bills, which is closely linked and serve as a benchmark for mortgage rates, has also came down and is coming down further, which signal that mortgage rates is still in the slight down. If there's lower interest rate, it will spike property demand. Over and over again, we see that when interest rate drop, transaction will pick up. If interest rate drop, like right now, transaction numbers will also increase. With lower interest rate environment, it means that transaction cost is lower, transactions number will increase, and demand of house will increase due to higher affordability based on lower interest rate, and this will means higher price acceptance from buyers. So in a nutshell, lower interest rate will have an effect of higher transaction volume and will have a market impact of higher benchmark prices in 2026. All right, let me touch on the next letter E. Expect prices to trot higher. Waiting may cost you more. So trotting into a trillion-dollar economy with unstoppable momentum. Take it with a pinch of salt. Recently, there's an analyst who predict that the Singapore Straits Times Index could reach 10,000 points by 2040. As I'm speaking right now, STI is about 4,005. So moving to 10,000, that is like double. So Singapore dollars could also hit parity with greenbacks, which means Singapore dollars will strengthen as much as on par with the US dollar. So right now, as I'm speaking, $1 is about $1.30 Sing dollar. So by the year 2040, the analysts predict that $1 is equals to 1 Sing dollar. Do you believe? Well, if you do, you are very positive. Strong positive market expectation has given developer confidence in their pricing strategy. Developers know that the market is positive, demand is high, and people can still afford this home. And that's why you see record prices in government land sales over and over again. Developers expect to set benchmark prices moving into 2026. How about you? Do you believe that 2026 will be another year where home prices continue to rise? Just take a look at what happens over and over again for the 3 regions. From the year 2020 till now 2025, that momentum has not stopped. I think 2026 will be another year where home market powers ahead. Last but not least, stay updated with the latest ERA brought. Our research team has carefully prepared all this information for you in blocks so that you can find out more about the current issues that affects the property market. So scan on these QR codes. So that sums up ERA monthly directions. Here is Marcus Chu, ERA CEO, signing off. Thank you.
Thank you, Marcus, for your invaluable insights. If you'd like to explore the opportunities discussed today, our ERA trusted advisors are here to help. And before we go, don't forget to join us as an ERA VIP. Remember, 10 lucky VIPs win $1,000 in travel dollars every month. So sign up now at vip.era.com.sg. Stay connected with us on ERA social media channels, and we look forward to seeing you at the next monthly Directions seminar. Thank you and have a wonderful day ahead.